Well, for a breakdown of how the market's performing in early trade, we'll cross now to Cameron Peacock from IG Markets in Melbourne. Cameron, thanks so much for joining us. Not quite as strong an open as IG Markets had been expecting. I think you were thinking it could be about 0.6%, but still good to see some gains nevertheless. What have you seen in the first hour of trade?
Yeah, good morning, Liz. Yeah, spot on. About, shortly after the US session closed, we had been calling the market up about 24, 25 points, about 0.6%, looking for it to unwind just shy of that 4,100 level. Obviously, we haven't quite got to those levels yet. As I look down on my screen, we're currently up about 0.3%, 12 points around that 4,082 level. But, we are seeing broad-based gains across the market, albeit very modest ones. We're seeing a little bit of money returning to the materials, the financials and the energy sector. We've got the materials up about 0.4%. Your likes of BHP, Rio and Fortescue sort of all up, between sort of 0.4 and about 1.4%. So doing relatively well, obviously benefiting from some of those stories yesterday and what emerged over the weekend with some infrastructure spending being ramped up in China. That's certainly helping some money return to those sorts of stocks. The energy sector, we saw having a relatively good session in the US last night. Crude prices up about 2%, currently around 83.40 a barrel, and the financials are just above the flat line. So really choppy market at the moment, and I think that's what we've seen over the last couple of days. You only have to look at the fact that on Friday, I think we had the Dow Jones up 90 points, down 140 on Monday, up 160 last night. So really just sort of trading in this range-bound sort of manner at the moment.
Yeah, and do you expect that is likely to continue at least until Sunday when those Greek elections take place? Do you think it's going to continue to be choppy at least until then, and perhaps after then we'll get some direction?
Yeah, absolutely. I think there's a real divergence of opinions at the moment. I mean, if you read commentary, if you watch, programs like yours, CNBC, Bloomberg, there's a whole host of guests, some bulls, some bears, and, that's causing the market to be sort of in a state of confusion at the moment. I guess at the moment there's a lot of competing forces and competing news stories. Obviously, there's the Spanish banking crisis, there's the Greek elections. Both of those issues go to the core of, is Europe going to survive in its current form? You've got the fiscal cliff being talked about in the US. That's the situation where some of these tax breaks and spending programs cease at the end of the year. Again, all of that's playing out against the backdrop of the presidential elections later in the year. And then you've got China. Is it slowing? Is it slowing too slowly? Are we going to see more stimulus? Again, a really mixed picture there. And I think until we get a consensus on some of these things, we are just going to be fairly range bound. But I think the key event, in the near term is certainly the Greek elections. That's going to go a long way to determining sentiment, a long way to determining I guess the near-term and medium-term fate of Europe. So once that situation has been resolved a little bit, I think people will be more confident putting money into the market. But until then, I think you're going to see money staying on the sidelines. Interesting point. We were talking this morning internally about a Bank of America Merrill Lynch funds management survey. I think record amounts of asset allocation being held in cash at the moment, about 5.3%. I think that's the highest level since March 2009. So that just goes to the core of the uncertainty out there at the moment.
Yeah, definitely. And overnight, though, it was quite a good lead from Europe and the US, despite Spain bond yields, 10-year bond yields rising to their highest level in the history of the Eurozone. At the moment, though, there has been some talk from an online magazine reporting, El Mundo, I think it's called, basically saying that Spain won't have to start making payments on that bailout loan until around 2017, which is really interesting. I guess, does that sort of question now the fact that it was thinking of possibly seeking a proper bailout, a more formal bailout?
Look, I'm not sure. I haven't come across that article or that story you're talking about. Obviously, as late as 2 or 3 weeks ago, I think the Prime Minister of Spain was saying, we don't need a bailout. This package, which was announced over the weekend, Spain went to great lengths to point out that it wasn't a bailout. They were calling it a line of credit and trying to differentiate themselves from the likes of Ireland and Greece. So the actual terms of repayment of this particular $100 billion, which is supposedly being used to recapitalise their banks, I'm not sure. There's still a lot of speculation how it's actually going to be funded. Is it going to come from the ESM and create a whole lot of subordination issues with other Spanish debt, or is it going to come from the EFSF and eliminate some of those sorts of issues? So I think part of the reason why the market hasn't really embraced this bank recapitalisation plan at the moment is because there's still so many uncertainties as to how it's going to play out, how it's going to be funded, and when these repayments and the repayment terms are going to kick in.
All right, Cameron Peacock from IG Markets, thanks so much for your analysis. Appreciate it.
Thanks, Liz.